G'day folks, Jim here from FX Charts. It is Wednesday the 20th of March. Well, it's been a pretty quiet Tuesday session while waiting on the Fed's interest rate decision due later on today. No changes are expected to policy, and the real interest is going to lie on what the statement has to say and also what the future economic growth projections are likely to be. In the meantime, the dollar, commodities, stocks and bonds have all been pretty quiet, and the charts do suggest a pretty similar session today. It's a fairly empty calendar actually. The only other item really on the agenda ahead of the Fed is going to come from the UK, where the inflation data, the CPI, RPI are due. Don't expect them to have much effect, and the UK's got much bigger things to think about right now than the inflation rate. So we're going to have a look at the charts, and starting with the euro. Okay, so as you can see from the euro, pretty much as with yesterday, we're sitting on this trend line here. If we do break down below it, we've got support fairly close by, sort of at 13.30, and again just under 1.13 the figure. Don't really expect to see that down there ahead of the Fed. And on the top side there's reasonable resistance at around 113.70 as we showed you yesterday. In the bigger picture, after Fed, the euro looks mildly positive. Direction really depends how dovish or otherwise the Fed are later in the day, but we are coming up to meet this 100-day, 55-day moving average, a break of which could take us up to 114.25 or so. But as I just said, we don't really expect any major surprises from the Fed this month, so it could be a fairly choppy but rather directionless move after the announcement. Elsewhere, the currencies are pretty much the same. I won't spend too much time there. The Aussie at the moment just does look a little bit heavy, but it's sitting on the 100-hour moving average with good support down here at around 70.75, and on the top side this sort of 71.10 to 15 area is currently capping it, and there's sort of downtrend resistance here at 71.20, which we can probably see if we, 71.20. So that's about it. The 4-hourly charts do look a little bit heavy at the moment, but once again, I don't think we're really going anywhere, and it's going to be a pretty range-bound session. The S&P made a new 5-month high today, going back to mid-October, early mid-October. Finished a little bit lower after a bit of a negative Chinese US trade headline, but it didn't come to much. But we are still sitting above these previous highs here. So the outlook remains relatively positive, I guess. The indicators are pointing mildly higher. We need to stay above this level, really above 2800, which is where the 100-hour moving average is. We just saw a dip down to there earlier. Now the short-term indicators do look a little bit heavy. I don't think we're really going to do very much today. We're just going to sit around. But the dailies still look positive though, and the weeklies still look positive. So I would suggest that probably buying dips is the way to go. But once again, it all depends on the outcome of the FOMC meeting. So I'd say square into the meeting and then take a direction from that. The only other thing is oil. Oil did move high. It got to 59.84. It's had a dip back to sort of 58.90, 59 the figure, and it's currently sitting on or around the 100 and 200 hour moving averages. Let me just get a better chart up. There we are. So having done that, let's just update that. We did briefly take out this 50% level of the whole move down, as I pointed out yesterday. We're sitting just below it at the moment, and the direction now will come from the Fed. A lower growth outlook will probably see oil top out here for the time being, but once again I prefer to be long with a stop loss just below 58. I'm really looking for a break above the day's high up to 60, and if we can take out $60 a barrel, then I think we're going to 61.25. The dailies do look reasonably positive. The weeklies also look mildly positive, and we do have this, if I blow this up, we've broken above, as I've said before, the 100-week moving average, so that's at 58.30. So as I say, keep stops below 58, looking for a move towards $60, $61. Anyway, that's about it for today. We'll all sit on our hands most of the day, and then it'll be a minute of blind panic straight after the Fed announcement. I think that's at about 5:30 tomorrow morning, Australian Eastern Time. So we'll be back tomorrow. Talk to you then. Bye.